Well, the Australian economy grew faster than expected in the March quarter, up by 1.1%, and that means it's growing at 3.5% for the year to date. Pretty good news, you would think. I'm joined by Callam Pickering, Business Spectator's economic correspondent. Callam, they are good numbers, aren't they?
I think, look, the numbers were a little bit higher than expected, but certainly they don't really change anything for the Australian economy. The first quarter indicated that growth was driven largely by the mining sector through exports and also residential investment. I mean, that was expected. But look, we need to focus on the June quarter now. And certainly the data so far in the June quarter has been a little bit weaker than expected. And that indicates we're in for a pretty tough slog over the rest of the year. Okay,
so let's break down the figures. So basically, mining is still holding the economy up, but I assume the big concern going forward is when does that mining strength start to wane? What are you seeing in terms of the forward indicators?
The CapEx survey from the ABS last week indicated that 2014-15 is probably going to be the year where mining collapses. And certainly at that point, we need some of our other sectors to come online to provide support for the Australian economy, such as consumption, such as exports, such as residential investment.
And what are we seeing there?
Residential investment looks pretty good at this point in time, but it's a very small share of the economy and it's unlikely to do much of the heavy lifting. Exports has been very strong, but the RBA yesterday indicated that they expect export growth to slow somewhat over the rest of 2014.
Plus we're seeing the iron ore price drop quite a bit too.
We are. So what we're seeing there is volumes of exports are increasing, but the actual value of those exports has actually been a lot softer, and that's feeding through to household incomes.
And finally, I guess the other one is consumption. There was some pretty poor figures about retail sales yesterday, and consumer confidence has taken a hit. So, will the consumer sort of pick up the slack from the mining sector slowdown?
It seems unlikely at this point. The household sector is facing a number of headwinds. For example, they're facing negative real wages at the moment, and that's the first time that's happened since at least 1998. That's as far as data goes back. They're also facing a number of budget cuts, and those budget cuts are targeted mainly at people on the lower side of the income distribution who tend to have a higher propensity to consume.
So talk about those negative real wages. What does that mean? It means that the money going into people's pockets is actually going backwards compared to what inflation is doing.
Yeah, that's exactly right. It's basically wage growth minus the inflation rate. So when that turns negative, effectively your ability to purchase goods and services has declined.
And is that the thing which is feeding into those poor consumer confidence figures, or is that more related to kind of some of the political machinations going on currently?
It certainly seems mainly to do with the budget at the moment. Consumers' confidence started to plummet around the time that the leaks began to emerge. And there's tentative signs that it's perhaps recovered a little bit in the last week or so, but it's certainly still at a low level. It's only sort of a little bit above where it was during the GFC.
Now, the RBA came out yesterday, obviously, and they've kept rates on hold at record lows. So that basically means you think that we're not going to see anything like a rate hike for quite some time.
I think it's highly unlikely that we'll see a rate hike this year. The RBA is taking a very long-term approach to policy. They're looking forward into next year when they expect the mining investment collapse to begin. And they're unlikely to do anything now that could compromise the non-mining sector leading into that collapse.
Now, I guess there's actually a really interesting comment in your piece yesterday where someone wrote a question saying, is it finally time for the recession that we had to have, given that we've had, almost 30 years of unbroken economic growth? Wages are quite high. There's sort of no export economy that's going to come out of Australia apart from the mining sector. I mean, is Australia has become so uncompetitive that actually something needs to be a circuit breaker for where we're at?
Well, I don't want to sit here and predict a recession, Jackson. That certainly wouldn't make me very popular. But it's certainly true that we do face a range of challenges, and it's going to be incredibly difficult for us to combat those challenges. We've got the government pulling back on expenditure at the same time that the mining investment's collapsing. We've got wage rates at the lowest they've been pretty much on record. All signs point to a period of fairly subdued growth. Whether it turns negative or not is completely up in the air, and I wouldn't want to speculate, but I certainly don't see the economy returning to above trend growth consistently for several years.
And just keep an eye on those figures in terms of mining investment and when that really starts to stop, right?
Yep, exactly.
Callam Pickering, thanks very much.
Thank you.